that's probably a good note to start on, man. Thank you everybody for being here today. We are joined by the one and only Chris Cady. Say hello, Chris.
Hi, everybody.
And we are here to talk about one of Chris's many areas of expertise, which is trading psychology. Many of you have seen some of the conversations we've had with Chris before. He is one of the guest educators for the Sang Lucci Master Course. A lot of the principles that he and I have exchanged and talked about, that we've had conversations with Lucci about, are integrated into our 3 Laws of Trading Playbook, which is what this whole series, this whole webinar series is based on. So if you go to 3ltplaybook.com, you can see this whole free experience that, as you can see here, answers the questions, what do I have to do to make it as a trader? So go check that out. This series is also leading up to the launch of the Sang Lucci Master Course, which starts on April 27th. Chris is one of the guest educators for that. He teaches 2 classes on trading psychology in the Master Course. It is our flagship educational experience, teaches you everything that you need to know in order to be a consistently successful and profitable trader. Again, the next live session starts on the 27th. We've had a bunch of people sign up because they're sitting around, they're quarantined, they don't have anything to do, and this is a great time to dive into all the recorded materials that you guys get access to right away, right when you sign up. So you get access to all the previous live sessions. The last one that Lucci did was in December. Not just Lucci, but Chris, Franchero, everybody did it in December. The next one, again, obviously starts up on April 27th, and you get lifetime access to all of them in the future. So we have people who signed up, 2-3 years ago who are coming back every single day or every single session for those. So no need to wait until the 27th, even though I know 90% of you will, because hey, we all like to procrastinate. So, but if you want to learn more about that, all you got to do is go to sanglucci.com/MC, and it will redirect you to this page, and you guys can sign up. We have payment plans available, 4-month payment plan if you want, at no extra charge. And we also have discounts for people who are Steam Room members. And we are offering discounts on a case-by-case basis for anyone who has been significantly affected by the coronavirus. We just ask that you guys explain a little bit of your circumstances to us. Obviously, we've all been affected by this, but for those of you out there who have maybe lost a job or had something really, really serious happen, we want to do what we can to help you out during this time. So if you guys are interested in the discount, shoot me an email, charlie@sanglucci.com, and we'll see what we can do. And let's get started, Chris. So we are talking about the 3rd law in the 3 Laws of Trading is master yourself, and that's all about trading psychology. And Chris, one of the things that we were talking about leading up to today in terms of what could be topical is the number of people right now, the number of traders who are out there who are just like exhausted. It's like they're taking artillery shots from all directions, because the market has been 30 days of basically insanity. And then on top of that, you have stress from coronavirus. You're in social isolation. Some people have either themselves or a family member, someone close to them is infected. There's so much uncertainty out there. So what I want to focus on today is how we can help these guys, everybody in here, trade in circumstances like these when you are hitting that level of exhaustion and that level of frustration. So before we go into it, do you want to give just a quick background, a quick snapshot, like a minute on your trading background?
Yeah, my background. Hi, everybody. Thank you for coming. I'm a trader by vocation, not a psychologist. And I've spent about 40 years now, ever since the ring opened, both in New York and Chicago. And hello to anybody who I've crossed paths with out there. And these are markets that are really over the top, uncharted stuff. And I think it's important that you do the simple things, like you get enough sleep, you make sure that your compensating behavior is not harming you in regards to making sure that your physical process is compromised. Like if you're partying, drinking way too much, make sure that you're getting enough sleep to compensate for it. Or if you're smoking pot, you understand that my experience with that had been that when I stopped smoking pot, the decision-making process was much more decisive. So that my experience with people smoking pot and using other sort of pharmaceuticals sort of hampered the ability to make decisive decisions quickly. So things, just make sure your compensating behavior is not detrimental to the decision-making process, which has such a razor fine, thin edge of being profitable or not in these markets.
And when you say compensating behavior, you're talking about the ways that you manage stress outside of the markets, basically.
Right. Some people, do yoga, ride their bike, go for a walk. Choose a more healthy compensating behavior.
And so, let's say you're, for you specifically, like you wake up in the morning and you can kind of feel that you got that extra layer of stress that's affecting you. How do you adjust your trading? How do you adjust your game plan and adjust your behaviors going into the trading day?
The best metaphor is the casino, right? There's the $5 table, the $50 table, the $5,000 table. And so you just want to choose which table's right for you, given the outcome of the potential payoff, what you see in regards to the risk reward, and as well as your ability to manage from your physical and emotional state at that time. If you've been drinking at lunch, you don't want to come back and start throwing around size. And if you've been fighting with somebody or you're emotionally at the end of your rope, like on Fridays, we're all so worked from the week of trying to keep up, because it's not just during the day, it's at night. We're having 100-handle moves. So, so knowing yourself in that regard, because if you're over trading or oversized with not a lot of, shall we say, emotional stability in your emotional bank account, you're going to end up panicking at the highs or panicking out at the lows and things like that. The markets are going to take advantage of your weakness for sure.
So you're saying cut down on size. Previously we talked about like cutting down on the amount of stimulus that you have too.
Certainly you want to make sure that your mindset is focused completely on the job at hand. Turn off your phone. Don't look at email. And if you're bored with the market, don't just take a step back, but don't look for other things. Don't look at your phone. Don't look at the email. And all my friends are like, "Where have you been?" I'm like, "Hey, I've turned off my phone. I can't. The moves are too big."
Right. Yeah. So, if you need to drop off, because basically what we're talking about is your nervous system, and whether you realize it or not, your nervous system during times like this is extremely taxed. So the amount of energy it takes to engage and in the same amount of work at the same level that you would typically be able to when your nervous system is not as taxed, is increased significantly, right? So what we're saying that you guys want to do, guys, is to reduce like the cognitive demands on yourself as much as possible, so you can focus, so you can channel the energy that you've got into what's important, which in this instance is trading, right, Chris? So
yeah, you're basically talking about efficiency, right? You want to have an efficient golf swing. You want to have an efficient ski turn, right? You want to be efficient in your thinking, and that allows you to concentrate for longer periods of time with less effort.
Mm-hmm.
And so, whatever if you see the task at hand is tape reading and we're going to follow the markets and it requires using a 1-minute chart and a reversion to the mean pattern, and you got to watch, well, you better make sure that you're not looking at your phone, or you're just being efficient in regards to the processes involved with doing your job.
Right. Okay. And so that's right. Again, about reducing the amount of sort of inputs into your cognitive system at any moment, so that you can really perform at a high level.
Another tip would be, check for the non-functional tension in your body, right? Are you tense in any particular spot? Are you breathing normally? are your shoulders hunched? You know, just do a quick scan and say, oh, I'm breathing normally. I can look around. I'm curious about what I'm doing. So, you know, the concept of functional tension versus non-functional tension.
Yeah, talk about that. What do you see as functional tension versus non-functional tension?
In regards to, it came from skiing, where in skiing, where you have a slight counter to the direction of travel. In other words, our body is facing at an angle away from the direction of travel. In other words, mostly down the hill. And so as you twist, that twisted feeling allows you a lever to push up against in your body. And I think golfers probably have the same thing. As they swing back and their body twists and then they uncork that twist, they have more power as they come through. So there's aspects of tension in your body that you can use functionally as a lever or as a spring. And then my friend Michael, who's a yoga teacher, said he came up with non-functional tension, and as though, right, where are you wasting energy being tense that you don't need to be?
And you're talking about physically for traders to be aware of this while you're trading.
Right, and you could probably use it for a mental process as well.
Right.
Like where in your brain, you know, what in your brain is not paying rent, so to speak.
Like what are you holding on to? You know, what are you white knuckling? Yeah.
You know, this loop of this old girlfriend, right? That's got to go while you're trading.
Now, there's never been a better time to let go of the old Hans.
Right. And so the task at hand requires a easygoing, pliable mind and the ability to be flexible quickly. And if you are in stratified positions or stratified mindsets, or you're caught in a loop in your brain, you're not going to be able to be curious. You won't be able to spin around and be like, whoop, this is different. I got to do something.
Okay. Faster. And so you're talking about using your physicality as a barometer to check in with where you're at in the day. So are you holding your breath? Are you clutching your shoulders up, like, or is your body relaxed? You know, I was talking to a trainer the other day who said, you know, he curls his toes when he's like super in, you know, in intense positions.
People do it in their ski boots when they're scared. And so, you know, people chew their pen, bite their nails. You hold your breath, you know, so you see it, right? You see, when we were in the ring, we used to see behaviors. People eat their trading cards, you know, chew their trading cards. So,
oh, that's awesome.
You know, there's definitely a connection between the mental and the physical. That's the point. The point is that and be aware of it. It's just, you know, everyone's different, but just be aware of the connection between the mental and the physical. That's all. I'm just trying to help in that regard.
Right. Got you. I mean, how do you, if someone asked you what's the right amount of fear to trade with during, you know, a time like this, like, you know, what role should fear play? Fear isn't always a negative thing, right? How would you talk to somebody about trying to get a gauge for what's the
I think there's a logarithmic connection between fear and being wrong. Like the fear element doesn't usually show up until you're wrong size. Right?
You're saying, okay, go on, sorry.
So in other words, if I put on a trade, I'm not scared, I'm curious, right? Like, hey, I think, you know, you have the ego strength to hit the mouse. You're like, I think, right? So I think I do hit the mouse. And then from there, you have to get rid of the inner cheerleader. But, you know, every tick that goes my way, oh, this is good for me, or every tick that goes against me, oh, this is bad for me, and get rid of that so you can at least judge the trade on its own merits rather than judging it how it affects your P&L. The idea of fear is that something is happening that's not planned and your position is too big and it's out of control. Fear is generally a sensation of things being out of control.
Okay.
Right? And so nothing good comes from fear other than the respect for things to go out of control or the fact that you can get really hurt. I would say that if you are experiencing fear, either don't trade or look for it in other places, right? If you like fear, like there are some people who are total adrenaline junkies. If you love fear, look for it in your physical
Are you
aspects of.
talking about, are you talking about yourself right now? Maybe a little
No,
bit.
but you can see, and it's something that I don't know if it's common in everybody, but you can see where people take risks in their lives. Do they take it financially? Do they take it emotionally? Do they take it artistically? You know, do they take it trading? Where do people choose to exercise the thrill they get from taking risks? You know, people are like, you got to roll the dice at some point, or, you know, and so the idea is that I don't necessarily view trading as a place to exercise the thrill, as though it is a byproduct for sure. Every time you hit the mouse and you trade, it is the unknown is thrilling, right? And I guess that's the argument that they use at a suicide hotline, like we're saying, right? Don't you want to see how it all works out? So I mean, essentially, that's what we're doing when we're trading. Is like we're going to see how it works out, and how are we going to do in a stressful situation. But again, touching back on fear, yeah, it's unavoidable. It happens. I would look to exercise it in a physical, surf bigger waves, ski steeper terrain, ride your bike faster, longer, harder, do a handstand in yoga, right? Or try and do a handstand at the beach on the sand, right? Where it's safe. Move away from taking the risk to the degree where it produces fear in the market and in your trading, and move it to another place where if that's your buzz, if that's what you like, and so and I do think there is that thrill seeking element which produces fear in a lot of traders, but the longevity of the game will cause you to burn out or take losses that are too big if you're over trading and you're scared. Right. As soon as you feel fear get smaller in your trade immediately, because essentially you need a balanced mind to pull off the trade and think clearly and how it's unwinding. If you're experiencing fear, that means you're too big and your loss is too great.
That's great. Okay. One of the things we were talking about before we hopped on is this concept of trading as a discovery process, right? And it's almost like a puzzle. How do you feel like that relates into this?
Yeah, I mean, the idea is that we're responsible for our own decisions in regards to if you subscribe to an astrologer or a newsletter or some sort of all the data that you read, and then or someone's service where you're buying somebody who tells you to make these trades, and you're kind of subcontracting out the decision making and the discovery process for trading. You don't necessarily, when they're wrong, you're mad at them, and then you're mad at yourself for listening to them and not doing the work yourself. So the idea is that the first step is that we wake up and we say we don't know what we're going to do. We don't know, right? We don't know, right? Like I look at the screen, I don't know what's going to happen, and then we go through the process, whichever way you use it, to get to the place where you think something is going to happen. That's the discovery process. And so as you become an owner, as you become personally owning your own discovery process, it engenders more confidence for you to hit the mouse. And then because you can't be perfect, time-wise, right? You're either going to be too early or too late. You can't get the absolute low or high tick. You're going to have that scarification. Hat tip to Paul on that one. The scarification process of, in other words, you have thick enough skin to sustain the slight move against you because you have enough confidence, because you alone have discovered this. And so you have logic and reason for what you're doing at the time that you're doing it. And so the idea of the discovery and the puzzle solving was, all these people in the ring used to do the Times crossword or Sudokus every day so fast. And I could not do or don't do them. But it dawned on me that mindset is that maybe some people who are good at these things can touch on the fact that, that the markets are like a puzzle, or the markets are where you own the discovery process. You've solved the puzzle yourself. And that can become a real positive stepping stone to keeping you interested and keeping you following sort of the markets as they go, and keeps you invested, and it makes you better over time.
Right.
That's
I'm interested to know, guys, type into the chat. I'm interested to know how many of you relate to that concept, because I think a lot of traders, we tend to get more advanced traders who come, people who've been around the block a couple times, who come to our community. And one of the things that I think newer traders start out with is they say to themselves, I want to do this for the money. I need to make money. And what you start to see with people who are a little bit more advanced, who've been around, especially after they've started making money, is they realize that they're, kind of the deeper reasons of why they're doing this. And one of the things is it's just constant fascination. It is a puzzle solving process, right? And they're just constantly doing that.
Right. I wrote here, can you currently assess the probability without an inner cheerleader?
Mm-hmm.
Right. Are you able to, to solve the puzzle and then assess the probability? It's like a jigsaw puzzle that's unfolding in front of you. When it gets here, what will these participants most likely do? What will I do in regards to where my position is at this point? Right. So you're always trying to solve the puzzle as it moves forward rather than solve the puzzle as a static problem. It's not really a static problem. It's a forward moving jigsaw puzzle.
It's a dynamic, constant living, breathing thing. Right. I mean, it's the most difficult puzzle in the world to solve. if you want to solve puzzles, this is the Mount Everest of them. I think I don't think I know that one emotion that a lot of traders are struggling with right now, Chris, is feeling like everybody else has gotten rich in the past month besides them, right? And so they're really frustrated. They feel like they've been sitting in front of the screens, grinding, working harder than they ever have, and they still don't have results to show for it. What would you say to someone who's kind of in that position?
The people who've taught me, who are much older and very successful, I've always said slow positive cash flow. Right. And what's interesting when you look at Twitter, the Twitter feeds and people are always bragging about their winners, but nobody ever puts up their losers. Right. And the losers always go, 8 out of 10 people lose everything.
Besides Lucci, he puts up his losers.
Yeah, no, I think I will forever be honored to teach next to him because of that.
Right. Yeah, but you're right. It's not often that people put up their losers. So you're saying it does not reflect reality. Your perception that everybody else is making money.
Yeah, we should actually get a guy from a risk department at a clearing firm to talk.
Yeah, that's a good idea. Yeah,
right. And just he spends his day getting people to wire them money every day, and generally 8 out of 10 people who open an account lose everything.
Yeah.
So the idea is that the losers go away. Nobody talks about them. So our job as traders is to just do the best we can. And Victor Sprandio would always say, it's your job to stay in business. There are days where they give away $1,000 bills, and you want to be here for when they do that. So,
keep your seat at the table.
Yeah, it's frustrating when somebody's like, I'm doing so great and I'm like trying my hardest and I'm barely, chipping away. It seems like to have survived this past month and just, we've done it. Congratulations if you survived. You deserve a medal because, I would suggest that the fact that we've done it, that you've survived, and that you have any sort of positive P&L in this environment is incredibly successful trading. And it's unlikely that we'll go through another scenario like it. I mean, whatever unfolds from here will probably be different and probably way easier to trade. So, there's that fooled by randomness aspect that in Taleb's book, where he says that there are certain people whose personality coincidentally dovetails with the way the macroeconomic situation is unfolding. And so what we just saw was in the sell-off was all the asset gatherers get smoked. All the people who were just passive longs got smoked. And maybe some of the people who had other personality traits for this sort of market behavior have done well. And now they'll not, as this ensuing shift happens now, where the Fed's buying everything and the vol will come in, we'll see, you know, there'll be another group of people with the personality bias that do well. But our job is just as individuals is, yeah, I know it hurts to hear that people are doing better than you when you're trying your hardest, but we still have to go to work. You know, it's like there's no crying in commodities. So the idea is that, you know,
You show up.
yeah, show up
That's your
tough.
job, to show up.
Right.
Yeah.
Yeah. You're doing your best. If you're doing your best, then that's better than 99% of the people out there.
I think that point about you know, various psychological profiles match up to different market environments is really important, is really spot on. And you know, it could be that just because, you know, one, you're looking at a very distorted representation of reality. You're looking at Twitter, you're looking at people posting their gains. That's not the truth. Most people are losing money right now. Two, even if some people are making money right now, it could just be that this is their market. That doesn't mean that your market never comes around, right?
Right.
So,
and they're just trumpeting their gains, and you know that whole Dunning-Kruger thing about they don't even know that they just think they're good, but in fact it's just that their biases are in step with this. Their biases are coincidentally in step with the macroeconomic and trading environment at this point.
right.
And so, you know, it's generally speaking, if someone's smart enough, they won't post up their you know, they, like Luch, at least he posts his winners and his losers.
Right.
But people on Twitter who just post winners just need to be deleted.
Right. Yeah. Get that noise out of your
Don't
your view.
Right.
And
you are you, and you know, don't ever apologize for being you if you're doing the best you can.
Yeah. And I think you know, to answer Volkov, the individual asking this question, you know, one thing that I think is relevant to this too is you can look at this circumstance and the challenge that you're feeling through this as an opportunity to understand more about yourself and why it is that, you know, maybe the attachment that you have to making money, right? The degree to which you are hanging your self-esteem on your P&L, that is something that is not going to serve your trading, and that's something that that's internal excavation that you need to do, and maybe this market and the experience you've had through it is showing you that this is the opportunity to do that work, right? Which maybe in less extreme times you wouldn't have had that opportunity. So
that's hard to do because you're alone. You know, you're alone, and you're by yourself, and the only report card we have is our P&L.
Mm-hmm.
And so, you know, exiting a loser sometimes is better, though it doesn't show up on your P&L. And
right.
So, you know, it's like we're saying, right? When you go to work, you expect to make money, so that when you make money, you're like, oh, that was a normal day, right? I made money like I expected to. And so when you lose money, it's more one-sided, right? The losses cost you more emotionally than the winners, because you didn't expect to lose. Mm-hmm. And so you need to make sure that's why we're trying to go for that risk mitigation and the slow positive cash flow and building upon our competence, rather than, like you're saying, right? Rather than anyway, I lost the point right there. Sorry. I'm watching the stocks. The stocks are exploding. I don't know what happened.
Okay. No worries. There's see, too many points of stimulus, guys. It overwhelms the nervous system. Then all of a sudden you stop talking.
They just anyway, must be they found a vaccine, let's just say, right?
or Trump said. Someone saying Tesla's ripping. Okay, so we got, and this is a good opportunity. Everybody, if you have questions, we got a bunch of them in the chat already. We got a couple in the Q&A section. Definitely keep them going. Chris Vinny is asking, first he's saying, been following you on Twitter, like your tweets with small nuggets of wisdom. Thank you. And then he's also asking, what are your thoughts on overtrading? Do you have any specific tips that you've used to avoid it?
Yeah, Dave Stone said it best, right? When you're cold, overtrade and trade super teeny to get back in step. And then
just get those reps in, basically.
And then Howie Cohen would always say, you always only have so much good karma on the other side. He would always stop after he had a run of winning trades. And so both are valid, I think, right? Like if you've been extremely hot, if you've been so hot, that's super destabilizing when you make money, because you start to lose your balance, emotionally speaking. So in regards to overtrading, yeah, overtrade small when you're cold, because it's like put on your uniform and stand on the playing field and take another swing at it. And
Right.
if you do it small, that's the only way back. And then understand that if you get a hot streak, that you only have, as Mr. Cohen used to say, you only have so much good karma, and then just be respectful of that.
Right.
And thank you
One
for.
thing, and another, something that somebody else brought up. I mean, you made the comment that, you know, we only have one report card, and that's our P&L. I mean, have you ever actually tried to put pen to paper and create another report card for yourself, where you're maybe a trading journal where you're actually marking, like, this is the degree to which I followed my process today, regardless of my P&L. You know, I give myself a 10 out of 10 today. This is, you know, therefore it's a
I
good,
think the markets are a moving target. So
yeah.
what I was good at today may not be relevant tomorrow.
Mm-hmm.
And so, and like everything, right? It made sense today, but there's new information tomorrow. So what is, you know, what was the truth today may not be the truth tomorrow.
But isn't your process sort of, isn't any trading process taking in that degree of uncertainty and sort
Yeah,
of being responsive to that, right?
yeah, I definitely, and I would encourage everybody else to, anything that you can do to get yourself out of the cheerleader and in step with the market is super, it's a great accomplishment to feel like you're in step, acting at the right time.
Right.
It's like,
I think,
right.
and I think that's one of the things that I know in the chat, I know in one-on-one conversations I've been having with traders, this is something that I'm seeing come up a lot, is everyone's personal lives are thrown into disarray right now. It's extremely stressful time. And so people go to the markets to be kind of a balm for that, right? To fill the void that their personal lives have created. So you feel out of control. You don't feel empowered right now. You feel, you know, like you're on your defenses. Some people start trading in bigger size. They want to see bigger numbers in their P&L so they can feel empowered, right? I mean, and that's sort of severing that connection, or being extremely aware of that connection, that interplay between your personal life and your performance is, I think, one of the hardest things for people to do, but it's so important. And just being aware, if you have a particularly large amount of stress on yourself right now, maybe don't trade, or trade in very small size, you know.
I'd love it. Sorry to interrupt. I'd love everybody to take a Post-it note, or, you know, we use order tickets. And I have one here that says, "Don't make it worse." Right? And just tape it to the screen. Just don't make it worse, right? If you know, just follow the rules. If you're going to add to a loser, just make sure you're really disciplined about that, and really try and refrain from ever doing anything that makes it worse in this environment, because, you know, it's just volatile. It's dangerous. You know, the costs of being wrong big here are fast and huge. And
Yeah,
it takes a lot to make it back.
right. Now is not the time to prove that you're
Yeah.
the man or woman that, you know, you feel like you have to be,
You know, the
right?
forced awareness thing, you buy a stock at 10, it goes to 9, you're like, it's cheap. And then it goes to 8, you're like, I can't believe it's so cheap. And then it's 7, you're like, I gotta load up. And next day you wake up, it's 4. And you're like, oh, you know, that's Mark Douglas, I think, writes about that forced awareness in his
Yeah,
books. And
right.
we want to avoid that in all of our situations. And I think the little snippet that you can put on your screens is, don't make it worse, right? That would be the first element of avoiding forced awareness.
We got a bunch of questions, so keep them coming in here. I'm going to give another quick plug here for the master course starting up. Again, if you want to learn directly from Chris, and of course Lucci and Ron Ronchero, Friedman, and Wall Street Jesus, April 27th, the next live session starts up, and you can sign up at any time. Just go to sayinglucci.com/MC, and it'll redirect you to this page in the 3LT playbook. And you can sign up. You can learn everything about what we teach in there. Chris and I's modules in there about trading psychology were really, really fun to teach last time. Looking forward to doing that again this time. I know a lot of people highlighted that, and the feedback we got is some of the most impactful stuff that they learned. So
I think Lucci's thing on tape reading is especially valuable in this market, because you just keep your nose on the ball and just trade the short term, because that's where we have an edge. Is, you can still trade the very short term, read the tape, and that way you have a better shot of controlling the next 5 minutes rather than the next 5 hours or 5 days. So right. I think the course is extremely valuable right now for learning the mechanics of making money on a short-term, low-risk way. And nobody teaches it. And he posts P&Ls and everything like that. I mean, that's transparent. That's ballsy.
Right. Yeah, it puts a little bit of extra pressure on himself. But
yeah.
Oliver's in here saying, if I start trading with the mindset of surrendering to the market, and I treat trading education like it's a graduate school, do I have higher probability of trading success?
Yeah, I think so. I think, right, like I've learned from people who were very successful and now dead or very old, and the only way to learn was from them, right? They didn't teach it in school. And you could have learned it on the floor if an older guy, successful guy, took a liking to you, or you paid your dues. But now, when the floors have all gone away, this is the way it happens. And yes, I do think it's worth paying for the knowledge, and I do think it's worth being able to have conversations with people who have been handed down the knowledge.
Get a mentor, yeah.
Right.
Yeah, we're not, we would never say that you can't do this on your own. There's certainly many, many, many examples of people who figured out how to do it on their own. It just takes longer, and it's harder, and it's a lower probability. I'm trying to think of people who I know. I know a couple people who are completely, entirely self-taught, like, and they just did it in a vacuum, but almost everyone had a mentor, had someone teach them the ropes. It's just going to accelerate your learning process. We're not saying you absolutely have to learn from us, or or you're doomed, but you got to find somebody, someone you can trust, who can teach you these skill sets.
Yeah. I mean,
we got a question. Oh, sorry. Go ahead, Chris.
Yeah, I was saying it's important, and it's choose your teachers wisely. Right? Investigate them completely. Don't just assume because they say they can teach, right? If whatever reason you don't jive with them, throw them away. Or if they teach something that you don't think works, throw it away. Like, investigate your teacher is what I'm saying.
And especially and if they're saying, you have to do it exactly like me, that's a big red flag. You don't want someone who's going to tell you to follow their system. You want someone who's going to teach you how to trade, how the market works, how to investigate your own mind, but then empower you to do it, on your own, in your own style.
We're all different, right? Some people have greater tolerances for the uncertainty, and like we're saying, right? It takes skill to be able to increase your size. It takes skill to be able to hone your timing. It takes skill to be able to show up day after day after day and concentrate.
Yeah.
And so, you need to be able to have a teacher who understands that what your strengths are and what your weaknesses are, so that the teacher then just concentrates on your strengths, right? Because you're a good fastball hitter doesn't mean you should learn to hit curveballs, right? You should just crush fastballs. And so make sure that your teacher and you jive in that regard is my point.
Right. Good question from Norse. What questions do you ask yourself before every trading day?
First question is, do I want to do it today? So make sure that you address that, like, hey, I want to do this today, right? Yeah, like, I want to do this. And then you
do this, meaning trade.
Yeah, do this. Like, hey, I'm going to go up and trade. And so, am I curious, right? I am curious. Am I well rested? Yes. Am I patient? Yes.
Curious as opposed to afraid. We were talking about.
Anxious, right?
Yeah, anxious. Yeah.
right? Am I neutral? Do I have a neutral mindset? Am I flexible enough in my opinion so that I am more interested in discovering which way the crowd wants to take the market? Because that's essentially what we're doing, right? We're crowdsourcing our decisions. We're letting the crowd make our decision and we're going along with them. And that's an element of timing. The question is, am I, you have to want to do it. You got to really want to do it, because if you don't, people are going to take your money, or the machines are going to take your money. You're competing against the smartest people in the world. Right. And so you have to respect the fact that you're not perfect, and the collective is going to be smarter than us. So if you want to make sure that you're addressing those realities before you even turn on the screen. And if you don't have the mind to understand that you're going to have to follow the market rather than tell the market what to do, you're going to have to make sure that you have the ability to be wrong quick, and you have to have the ability to add when it's right. And those are all superhuman skills. And so hopefully that, very simply, you ask yourself when you wake up in the morning, am I thinking clearly enough to do the job correctly today, knowing what the job entails?
Mm-hmm. And if you aren't, you don't have to. That's the beauty about trading. You can decide when you want to play.
Right. Or if you're a junkie, right, then just careful, right? Don't do it for the thrill.
Yeah.
Definitely.
Yeah. It doesn't work out. Don't
do it for the thrill. Because long after you're dead and gone, they'll still trade. The markets will still be here. You're not going to miss anything, right?
Right.
My input in the market does not determine the market. Right. Look at the world. The world is shut down and we're still trading.
Yeah, that's an extremely good point. Todd Morgan is throwing out an Ed Seykota quote. One will get from the market exactly what they desire. Meaning, if you want drama in your life, you get drama. If you want revenge,
Yeah, the monks always say, you get what you deserve. Right? You can say that to somebody who's been an asshole to you, and they'll always wonder what you mean. But you just mean that, right? You will get what you deserve.
Right. It comes around.
Yeah, it comes around. Sometimes it's a time lag that's a bitch. But
Vinny says, if you want money, you don't get money. That's a good caveat to that quote. Let's do like two more questions.
Yeah, sure. An interesting point is that we're trying to be in step, not necessarily be right or wrong.
Mm-hmm.
Mm-hmm. Does that make sense to people? Think about that, right? Just be in step.
Yeah. Do you guys get that?
Be in step rather than being right or wrong. It's like you're constantly trying to be just ahead of it, just a fraction ahead of them.
Right. Yeah, because especially with options, you can be right, but if your timing's off, then you are wrong.
For sure.
Let's see, what do we got here?
Yeah, congratulations for all still being in business. I know there's got to have been some horror stories. I got, even myself, I lost 100 handles after one just 15-minute section. And it was a small loss, but I was just like, I had never experienced a loss of that magnitude. It was just a couple micros. But I was like, oh my God, I've been wrong 100 handles in like 20 minutes. So I understand the trauma that we've all been through is significant. So please, not only do you have to be wise about your decision making, but you need self-compassion here, right? So understand you need both wisdom and the self-compassion to forgive yourself when you're right, and to forgive yourself if you're tired, and to forgive yourself if you've snapped, and apologize to the people that you snap at. But remember that it's a blend of both being smart and being compassionate.
Well said.
Two wings of the bird.
Two wings of the bird. I like that. Is it... All right. Any thoughts on selling too soon, too late? How do you balance greed and fear? I often find selling too soon for winning positions for fear of market turning against me.
I assume generally most traders are too soon, too early, because we're so sensitive and we're watching the screen, and rather than too late. And it's much harder to get involved late than it is early. And then that's Paul's term of scarification, right? We need the thick skin, the scars on our body to sustain the slight move against us in time and price, because we're going to be early. And so that leads to the question of, did you do the work yourself? Do you have confidence in your decision-making process, and that you can sustain through the scarification that you have, the ability to weather the uncertainty? Many people who are early time get burnt out on holding the position. They, certain people don't have the mental fortitude to be able to sustain that because it's impossible to be perfect. So given the fact that it's impossible to be perfect, what will give you confidence to stay with the trade? Does that mean that you need to be smaller? Does that mean that you need to prepare to give yourself a little bit more time to be right, or before you have to get out because you're wrong? Does that mean you've developed a system that you have confidence in? Does that mean that you set yourself a threshold? Like, I found it to be very helpful to be like, okay, I'm going to put this trade on, and if I'm not right, and just look at the time on the clock when you hit the mouse and say, if I'm not right here in 5 minutes, I'm gone from this trade.
Yeah.
And so being early and late is the dance forever. And you can't sell the high, or if you do sell the high, it's not the high. And if you do buy the low, it's not the low. Sorry, it just does not work that way. And so it's part of the process. Because you understand it's part of the process, it comes with the deal. We assume that you're going to be early because you're sensitive. We assume that you're going to be right because you've done the work. Then it's just the decision tree then becomes, how much time am I going to allot before I either get small or I get out before, or if I'm right. And then if I'm right, then the decision tree becomes, do I put a stop in, do I add, and things of that nature. But those are the important emotional processes that go on, that's unfolding in the real time, in a very fast moving market. So rather be early than late. Give yourself a time stop, understand, build up that scarification, or understand that it's impossible to be perfect. Right. So then the question becomes, how much time goes by, or how much price goes by before I'm wrong? And then if you're right, you can manage it. Hopefully you can manage a trade and add to it if that's what you're looking to do. There's the understanding of the structure too, and under the market, right? If you're trading a reversion to the mean, make sure that you're not in a situation where the market's going to go vertical and not come back. And then, so there is the understanding of that structure, and that's not really what we're talking about here, and you can learn it through the Lucci course. But you need to integrate both the structure and the time in regards to the early late process, and also maintain your scarification, right? A stoic attitude, so to speak. You can't be perfect. Okay, I know I'm not going to be perfect, therefore I'm going to sit here and not panic while I'm wrong. And I have reasons for what I'm doing. I'm not trading emotionally without a reason.
Last question, I think, is a great question. Which mentor or people have been most vital to your learning? And maybe you could pull one or two of the things that you learned from them.
Pete Stottlemyre created Market Profile, said in 1991, he said, how you segment data is going to be the key to the future of trading. And you see that now, right? How you segment data in regards to your times, your graphs, your whatever you're using is important. Victor Sperandio would talk about, he would say, look at life insurance companies. He would say, you can sell life insurance to a 90-year-old man. He may live to be 96, but it's not a great trade. And so he would quantify the length and duration of all market moves, and use those sort of actuarial tables to make his decisions in regards to probabilities in longer duration moves, which was interesting. Walter Frank Sr. was chairman of the New York Stock Exchange, the guy who gave me my job, and he would say, you know, it's how you shuffle the deck.
What does that mean?
That, you know, how you just traded among the order flow more. You know, were you a good tape reader?
Mm.
And and then there were many lessons from the floor, you know, from millions of people. And I hope, you know, most of them are still doing well, I hope. You know, Dave Stone would say, you know, when you're wrong, trade more, trade small. I thought that was great. And you know, there are people like Walter would say, you know, after a loss, he'd say, well, you'd have a trade on, he'd say, you know, and you'd think you'd be right. And he'd say, you know, you have to have a money stop. And I'd be like, oh, okay, that's a good idea. And then also he would say, you know, after you take a loss, he says, now can we get on with the rest of our lives?
Mm.
Right. You know, the idea, you know, because losses are traumatic and they hurt more. And so that's an important element, to be able to move past them and not to sweep them under the rug, like in a state of denial. Like, you really have to own them, because you don't want to make the same decision again.
Mm. Don't avoid it. Yeah.
But, you know, in looking for I guess that question is like looking for teachers, like investigate them, find people who are real, who aren't trying to sell you something, but are trying to help.
Mm.
And that's really important. Like, you know, that I think is harder to find, but I think they're out there.
Yeah.
I hope that helps. Hopefully I can do that. You know,
yeah, yourself amongst them.
I trade for a living. I don't teach per se. So
you do. I mean, you don't teach for a living, but
right.
You do teach now. So,
hopefully that helps. And thank you for that question. That's a great way to thank my teachers.
Yeah. Yeah, guys. Well, thank you for being here. Thank you for the questions. Next week on Thursday, we're bringing it home with a conversation with Lucci and I on trading psychology. If you want to learn directly from Chris, again, check out the master course. I'll drop the link in here, sanglucci.com/MC. Email me for discounts from the Steam Room, or if you're affected by the coronavirus. And you know, we're looking forward to having some of you join us. So thank you for being here, Chris. Thanks for joining, man.
I hope I can help. If there's anybody needs me, I'm on Twitter, Chris Cady, Chris C. Cady, and I'll try and do my best to help you in any way possible.
All right, guys. Thanks for being here. Talk soon.
Bye.